Everybody, and welcome to the second workshop of the 2025 Investor Literacy Programme as part of Seeds of Bravery. Please note that this workshop is being recorded, and you can also use our chat function to ask any questions. If we can't answer them in the time allotted, and if we are tight on time, we will come back to you on any questions. I'm Fionnuala Wall, and I'm the EU Projects Manager and Marketing Manager for Access BIC. Access BIC is one of the 20 partners in the Seeds of Bravery project. Access BIC is located in Cork, Ireland, and we work with startups from early stage to scaling. Seeds of Bravery is a €20 million project funded by the European Union to support Ukrainian startups. To date, over 300 beneficiaries and startups have been awarded funding up to 8 million, with a total of 12 million earmarked to support Ukrainian startups. Seeds of Bravery remains committed to strengthening the Ukrainian startup ecosystem by empowering entrepreneurs to bring their ideas to life and expand into global markets. In addition to financial grants, Seeds of Bravery offers participation in non-financial support programs, just like the Investor Literacy Programme you have today. The others programs are on business consulting, market analysis, matchmaking, market fast track, female entrepreneurship. Now I'd like to hand over to my colleague, Larry O'Donoghue, who will give a short recap on last month's workshop, as well as looking ahead to today. Thank you.
Cheers, Fionnuala. Thanks for that. Good afternoon, everybody. You're very welcome to the second workshop in our Investor Literacy Programme. This is our second year running this, so delighted to bring this to you again. My name is Larry O'Donoghue. I'm a colleague of Fionnuala's. I'm the CEO of Access BIC, and we work very intensely with high growth startups, and a big part of that is helping them to raise investment. So we've a long history in organizing angel investors and structuring syndicates and starting syndicates, in developing the network of angels and syndicates within Ireland. So we started that back in 2007, and we ran that network and grew it for 17 years. So we started at zero and we grew it to 33 million of pure angel investment into high growth startups every year. So that was something we're very proud of indeed, and we're very happy that we're able to share some of that experience with this project here today. So this, like we said, is the second workshop in a 3-workshop program called the Investor Literacy Programme. Last month, around the same time of the month, last month, we had the first workshop. So we had a nice, let's say, a gentle introduction to the whole world of angel investing. So the idea or the audience for this program is potential angel investors, maybe new angel investors, or people who are just thinking that angel investing might be something that they're interested in doing. So the first workshop was very much an introduction to that angel investing, and my colleague Georgie talked about some of the there's a very specific language, I guess, around angel investing. We talk about deal flow and about syndicates and about angel investors and due diligence. All of this terminology is specific to angel investing. So we went through some of that, some of the pros and cons, why you would become an angel investor, what are the risks, what are the benefits, what are the expectations when you invest in a company. So all of that good stuff around introducing the whole concept of angel investing. We then had what I hope was a very interesting discussion with some active and very experienced angel investors. We had an interesting chat with Teresa Chambers, a female Irish angel investor and member of a syndicate. We had Jerome Leclanche, who was interesting in that he is a serial founder himself and has become an angel investor into companies through a syndicate, but also through venture capital route. And we had an individual angel investor called Dennis Sarchuk. So Dennis has about 15 investments done to date. So he and the rest of the panel spoke about their experience, what they look for, what they like, what they don't like, etc. within angel investing. So we got some really good tips from people there. And then finally, we had a very interesting keynote in the differences in investing in deep tech startups. So startups that are very intellectual property driven, very research driven. How Technalia Ventures invests in those kind of companies and how it supports them through commercializing that IP and invests and supports them and helps to grow and scale those deep tech startup companies, which I think was very relevant to the Seeds of Bravery because it's predominantly deep tech startups that we're working with in this very important project. So that was workshop 1. Workshop 2, what we're going to cover today, or today's journey. I see Yuri's after joining us there. So this is going to be, I think, a really interesting piece. First off, it's going to be a look at the angel investment ecosystem in Ukraine. And again, this is the second year we've done this. So Yuri and his organization, iClub, did a huge amount of research into the angel investment ecosystem in Ukraine last year and did this presentation. I'm delighted he's back to do it again this year because it's an updated version of it. And I think there's some really interesting updates that might surprise people, actually, given what has happened in Ukraine over the last number of years, but maybe some positive signs coming from the Ukraine investment ecosystem. So really looking forward to hearing about that. We're going to Aidan O'Driscoll in Ireland is going to join us here. Aidan is the founder of Iris Investments, a very active life science investment syndicate here in Ireland. And they deploy about 15 to 20 million per year into high growth startups. So Aidan's going to talk to us a little bit about angel syndicates, why join them, the benefits, angel networks, and how syndicates come together with other syndicates to put deals together. So I think that's going to be an interesting chat there as well. We're then going to talk to Donna Kiernan. I think this is an interesting discussion as well around how informal syndicates, or kind of loosely put together angel syndicates, transition into formal syndicates. So formal, professional, fee-paying structures, and provide a full service to their angel members. So that's something that Donna has managed in one particular syndicate over the last couple of years. So it's going to be interesting to talk to Donna or hear from Donna about that. We're going to have a panel discussion again. So we're going to hear, we're moving on from introduction to angel investing to what's it actually like and how does deal flow actually work? How do we screen companies before we bring them into in front of angels to pitch? How do we then, what are we actually looking for in a pitch? So what does good look like? We're going to talk to 3 angel investors and leaders within their communities around their history, their experience, maybe get some good stories from them of what success looks like and maybe what failure looks like as well. And so they're going to stay with us then, and we're going to have a past participant, Ukrainian company. They're going to come on and do, Ole is going to come on and do the actual pitch. So he's hoping to launch his seed round investment in early 2026. So he's going to come on and actually show us his investor pitch. And we're going to ask the panel members, the angels, to actually ask some questions of Ole as if this was a real live pitch situation or scenario. And then finally, we're going to hear from Jacopo Loso. Jacopo is the Director General of EBAN. EBAN is the European Business Angel Network. So this is the umbrella organization across all angel investing across Europe. So Jacopo is going to talk to us about what it's like to invest or what the pan-European angel network looks like across Europe. Okay, so we're gonna cover quite a bit. So before first up, we have Yuri. Hi, Yuri. How are you? Thank you so much for joining us again. I give it a little bit of an introduction there. I'm not going to say too much more. I'm really looking forward to seeing this information again, but especially the update part of it. So I think there's some really exciting information here. So Yuri, you're welcome, and thank you very much.
Thank you, and really nice agenda because all the familiar faces on the same panel. And again, happy to share all these updates for this year as well. So let me maybe start to share my screen, and we're about to start with the presentation. Okay, my name is Yuri Romanyuk, and I'm manager partner of the iClub. So we doing venture capital business since 2018 in Ukraine specifically. We are also the part of the big umbrella. It's called T Ventures. It's venture capital funds with more than 15 years and great tractions, not just in Ukraine. They built traction across Europe, North America. And all of these numbers that we have here, it's exactly what we already deployed and already achieved with venture capital as asset class. I think, Larry, on the last workshop, you mentioned that you cover up all these vehicles, different topics, and related to angel investors, specific terms that should be in line with understanding of the topic of venture capital. But today I will be mostly focusing on ecosystem and how exactly we are stating here today and explaining what exactly happened in Ukraine in terms of venture capital ecosystem. Long story short, I want to tell you first of all about one company. It's called Udel. It was a very interesting story because maybe every phone right now has a facial recognition software. Back in the days, it was exactly a situation when it was established technology in a Ukrainian university as a scientific project for the satellites image recognition system. You should not ask me why and how satellites should recognize your face. Maybe when you have turn your heads up and then you just match it with some identity. But anyhow, that was already been developed in the 90s, and the team of these Ukrainian entrepreneurs, they established this company. They run completely from like point of scientific project to the deployment in a real actual phone. And that was exactly the moment when the Motorola, and was a separate unit that was acquired by Google, completely interested about this project. They acquired this company, and right now, of course, it's already a story. But behind every story, we have an identity. We have Ukrainian founder. Here you can see Yuri Freiman. He already established like significant progress in terms of his exit. He's brilliant, straightforward thinking, visionary, and his specialty is cybersecurity. So right now we also have some projects and startups with Yuri in our portfolio, and definitely if you can research this person, I definitely suggest you to start it from here, because that's how the ecosystem was started out in terms of where just local technology can utilize globally and easily scale to every phone and every device across the globe. But if we're talking about European funding this year, we already can see that it's different compared to the last years, especially from the figures perspective and industry perspective, because you can see that it does look that it was exactly the same and it was planned. It should be like this. But given the circumstances we are faced right now, it is reality that defense and, of course, AI agents, medtech, it's a new world that we'll probably live in the next decade. But in my opinion, this situation was not like this every year. And if we're talking about, for example, Ukraine specifically, that's the reality that we was exactly faced for the last few years. So we seen clear path on growth. And then the war apparently happened in Ukraine. That's basically shift the focus from what we achieved to what we can do with the results that we can do with. And in my opinion, like, of course, every industry and every problem can come with opportunity. In our case, we try to figure out everything ourselves, basically. In terms of fundraising perspective, we can easily track there is a lot of great company that's already on radar. We can identify them, and most of them, they're not just working with Ukrainian market. They have global investors list. They raise plenty of funding rounds, money from the VCs, but that's exactly how it should be in other ecosystem. But in Ukraine, we have also a sort of different angle, because companies, for example, like FinTech Farm, from the beginning, they start to raise money from institutional investors and from the sophisticated European VC funds and private equities. And that's exactly how this company play out on a bigger scale, not just in one region, but in different regions at the same time. And in my opinion, that's probably the winning strategy. Because if we're talking about going ahead, I think that's every company in Ukraine, they already face this reality that local market has significant potential, but we have like one issue that's called war, and we need to work with this on just scale and time, and not on our favor. In terms of progress that we have inside our portfolio, we have another company called Liquid24 that significantly raised Series A rounds. It was an amazing company, and right now we have this number that basically showing this progress and align every reality to the perspective that these kind of founders still apparently pop up on radar in the venture capital market. And moving forward, of course, I want to highlight that it's not just about founders, but also investors, because the perspective of the venture capital market changes as well. If we're talking about, for example, number of angel investors, this trend is continuously growing. You can see that the graph simple, but again, the facts is here. We have Ukrainian unicorns that already established this progress, and the sophisticated funding round that show up that Ukrainian technology project and deep tech innovations can definitely be something that's quite clear can change the industry globally. And of course, we have this kind of trend evolved to the point that every like business or every individual or founder wants to pay back or step into the reality of investor. And that's a clear path, because again, if you start to earn your own money online through online business, you definitely want to continuously evolve your understanding of this topic, but from a different angle, from the investor's perspective. In terms of like key players, just maybe to highlight some facts that were important to know, because industry also not just wait for something, we just moving every day forward with what we can do. And I think that what you can see here clearly, that it's not just the reality that we have like consumer business or enterprise software. We have clear here path that we have a defense tech company that's already built traction, and we already built a great portfolio for angel syndicates in Ukraine. And you can see that the figures of when it was started out, like for specific syndicates like Tolaka, ZAS, by the way, Andrew, you will be probably also sharing some updates with us as well. It will be really interesting. I will stay as much long to hear you as well. Like United Angels Network, they start out a bit earlier than everyone else, but again, we already see that the progress is there. The portfolio is amazing. The founders are different because they not come up to idea of starting company from the perspective of fun, but rather of understanding that they don't have other options to not just stay, but basically face some challenge and implement the vision of what they can do with these challenges. And as just to point it out importantly, that's from this company that I put here, we not just waiting for next unicorns, but probably next decacorns that will be stepping to the shoes of new like favorites of the venture capital market and media's updates for the next decade, because every company has a unique flavor, has sophisticated founders, and definitely the right time to do so, it's now. If we're talking about the defense growth as a key motivator of growth for the venture capital as well, we see that the allocation of the budgets in terms of industry, it's significant. Of course, for the past several years, it's growing exponentially. Again, the reason is simple. The reason is clear. We have, again, a war agenda that just knocking on the door, and so we need to be prepared. In terms of the budget, it's not just a budget for investments. It's mostly to just completely renovate weapon systems and, of course, defense system inside European countries. But what I want to emphasize with this clear mapping, that just not like trend for the next 5-7 months. This also the trend for the next decade. Even if the war will stop today, the problem will not solve, because again, the weapon that we have right now in the whole countries in the European Union, they need to be updated for the modern standard that we right now see in Ukraine. If we're talking about Ukraine specifically, it was started out as a small cohort of founders in several regions that was started out to do something with the drone technologies, with some intelligence technologies, and then basically we burst up the Brave One. It's a very important player in Ukraine because they are accelerating project on scale, and that's already a reality. There is plenty of companies that pass this project acceleration program. We have D3. It's very interesting, fun, because it has roots from the company originally backed by the Google co-founder, and that's also important aspect, because there is plenty of updates around this fund. And I want to also everyone, if you are a founder from Ukraine, you should definitely meet Elia. She is amazing, and she is a partner and driving power of the D3 as well. If we're talking about like the players that can also help you out with the angels check and angel investment, here we'll have Andrew from DES. We also have amazing United Angel Network. I love Ivan. He's a brilliant visionary investor, and definitely he will be next big investor. Probably it will be story about the Ukrainian famous startups exactly from this fund, because they are only defense tech investors. They most of the time invest in defense tech, so that's amazing. And of course, Angel One is also like an important player on the radar. And if we're talking about like what we have here, it's just names, but every company that has technology related to the defense tech, they also can be used in dual use format. It's not just a topic of the war. It's also a topic of how fast we can see this innovation will apparently go back to the civil use. As I pointed out at the beginning, we had the similar thing with the VUDL, because it was completely military technology that was originally developed for the satellites. Right now, it's different story. It has every access to the mobile phone, so it's already a completely different angle. But from the perspective of the defense production, like numbers is there, like 10 billion already involved for the production in Ukraine defense. And we are proud that we are part of this story, because our portfolio company like Destinus, they not just produce a lot of different technologies, but also acquired European players in topics of AI and scaling crazy fast, because they do a lot of interesting projects. If you also want to, you can research. They have a lot of founders and team in Ukraine, by the way. A part of that, what I also emphasize, that this number is coming not just for startup, but it's also like coming for players that can be relied on idea, providing some like supply chain format for your ideas and implementation. Because again, we have players that already scale for the 100 million sales and above, and definitely they can teach every startup inside Ukraine to do like probably the same scale. From the rising stars perspective, I want to emphasize for companies like Svarmer, it's brilliant technology that's basically one of the kind, and create already a lot of buzz across all just investors, not in Ukraine, but also in Silicon Valley. They recently raised 15 million funding round. They own scale. It's completely clear that this technology can be guarded, not just Ukraine, but whole European Union countries as well. And if we're talking about perspective, what exactly needs to be done in terms of the same projection and the same figures, but in terms of scale, in 5 years, maybe like we'll see different picture. But again, we need to face that the growth will continuously go further because again, the market is there. Technology already also clearly established and tested in Ukrainian founder. Important factor is to establish as much as possible angel investors network, because that will help drastically to face the reality that we will have more technology founders that will start a project this year. And that's project from today that we are sharing this information is exactly on the same path. What I want to definitely headline as a potential changes is regulation inside Ukraine, because we need to adopt a lot of legislation that help foreign LPs to step in not just investing in startups, but also like establish clear vision on how they can sort of be secure in terms of legal structure and investments. And yes, scale is there, but we will see this reality like next few months, is because like again, I hopefully we'll see like next Ukraine defense tech unicorn that will be announced this or probably next year. That will be nice to hear some updates about this. And what I want to summarize my conversation about the Ukrainian ecosystem, as you can see this every aspect is here. Like you have roots with technologies, with great founders that already established great traction. We also have already mark of 5,000 angel investors that already established in Ukraine, and we'll see the same trend continues to go, because again, sometimes when you see a challenge, it's come with a favor. In our case, it's difficult challenge, but what I can see that's the number of angel syndicates is growing exponentially, the number of angel investors as well. And the point is simple, like, because right now the value of this Ukrainian startup may be a bit lower than in Silicon Valley, but it could be changed also if we can see this progress that we've done already for the past few years. I hope that we'll definitely face the reality when Ukrainian startups can also do more and more in terms of their revenue and traction result, and definitely like I have high hopes for these founders that watching right now us, because you are basically creating this reality for not just you, but for the industry and for the ecosystem. And thank you so much. You can check this presentation as a part of the program, because we'll share these figures and statistics for you, so you can easily navigate with this information. That's it. Thank you so much.
Fantastic, Yuri. That was a real whistle-stop tour, and it's so great to see that all the graphs are going up, the investment is rising, the numbers of investors are rising, and the amount of angel clubs are increasing. So it's all good news, which is great, and we just hope that everything else heads in that direction as well. So thank you very much for sharing that presentation with us. We're going to have to move on. We were a little bit late getting started, so if Yuri, you can unshare your screen, and we will move on to Aidan O'Driscoll. So inviting Aidan O'Driscoll to join us, and Aidan is the founder of Iris Investments, one of the most successful angel investment syndicates in Ireland. They have 40 members and have invested over 40 million euro in early stage companies, particularly in the medtech area. Aidan, if you'd like to share your screen and get started and give us a bit of an introduction, I leave the floor to you.
Okay, thank you, Verna. My name is Aidan O'Driscoll, and I run a syndicate called Iris Investment. We specialize in life sciences, and to date, we have invested close to 75 million in 35 companies in Ireland. 10 years ago, syndicates didn't exist in Ireland. And so there was a dearth of angel funding or any type of funding for startups. Syndicates have filled that gap and are continuing to grow on an annual basis every year. So what I want to start today is just basically it's outlined what is an angel investment syndicate. And very simply, it's a group of individuals who come together that they structure deals and they negotiate and evaluate various startups that come their way. It's not a fund. And I think this is a very important thing because a lot of people, when they invest in funds, they don't have any control over their money. They don't have any control over where the investment goes. In this particular case, it is, and when you're doing with a syndicate, you decide when to invest and where to invest. So you really only invest in projects that you like. So this is a very important differentiating factor because you can opt in and you can opt out. And for example, in the syndicate that I run, we have 60 members. In some deals, we might have 20 members. In some deals, we might have 40 members. So you spread your funds, you decide where you want to put your money. Typically, and this will be covered later, a syndicate, you pay an annual membership fee. And the main reason we do that is to ensure that people remain active. If you're going to part with your money, you must remain active in the syndicate. And we charge typically an arrangement fee per deal, and this is typically just a one-off fee, and then thereafter there are no further fees. These fees that we collect by way of membership and by way of arrangement basically run the syndicate. So as I mentioned, there's no fees thereafter, there's no exit, etc. So why should you join an angel syndicate? Well, you've access to deal flow. And as an individual, you cannot possibly cover all the opportunities that are out there. You probably won't get access to any of those potential deals. So by having somebody who has, and people in the syndicate that run the syndicate, etc., will vet new HPSUs for you, and they will basically be presenting to you opportunities that they have looked at. Typically in the syndicate, there's a lot of screening of opportunities goes on before syndicates meet. Typically, each syndicate will only bring 3 or 4 new deals per quarter to the members. And if you are an individual, that is very difficult to do. With a syndicate, you have access to that. And by virtue of being in a syndicate, a lot of the work with regard to due diligence, with term sheets, legals, and understanding all of that, that is a minefield in its own right. Over a period of time, you learn how deals are structured. You sit on the outside looking in until you start participating in deals yourself. But a lot of this work is now being done by other individuals who have the expertise within the syndicate, or the syndicate goes out and brings in outside experts where they require them. In our case, we only look at life sciences. So in a lot of cases, we will not have the domain knowledge, but we will go out and we will hire consultants who will come in and give us that domain knowledge that we require. That is all funded by the syndicate. It's all funded by your fees. And that gives you access to deals you know are now in a position to invest in. You then make up your mind whether you're interested in investing or not. So very little overhead. You get an opportunity that is presented to you. And a lot of the work that is around, if you had to do as an individual, is now taken away from you, and you come part of a group to do that. Also, more importantly, you spread your risk. Instead of having €100,000 spread over maybe one project, you might, and this is what typical people in the syndicates do, you would spread it maybe over 5 deals. So you spread your risk. We all know that startups have a very high failure rate. So if you can spread your risk, then you're in a position of whereby maybe 50% of your investments will come good. And that then gives you a better opportunity to get a return on your investment, and you lower your risk considerably. Also, you now have the opportunity to meet with other individuals. You get to meet with the founders. You get to meet with other members in the syndicate, other people with expert knowledge, etc. That is not available to you as an individual. So being part of a syndicate, and especially a syndicate that you want to invest in, for example, our syndicate is life sciences. So we look after primarily medical devices that have got IP. That is the sweet spot for us. Other syndicates are interested in AI. Other syndicates are interested in ag tech, whichever the case may be. So you can look at which syndicate is suitable for you. You then see the opportunities that the syndicate give you. You spread your risk, and it allows you to invest and monitor what goes on, because each syndicate then reports back on a regular basis to its members. And you can see what is happening in that syndicate. It's important that you have the opportunity to look at what's happening and getting updated knowledge of what information of what's going on in the syndicate. Typically, a syndicate, because of the bargaining power that we have, we typically sit on the board of these companies, and the person who sits on the board reports back to the members and updating what's going on. So rather than being a very passive investor, through the syndicate, you become a very much an active investor. So syndicates give you that, which as an individual, you would not be in a position to do so. So there are all the benefits of joining a syndicate. And I've seen firsthand in my own experience over the years, by spreading the risk, by getting the knowledge of the various deals that are out there, syndicates are the way to go. In Ireland, as I said, 10 years ago, it didn't exist. In the last 4 years, we've invested in excess of 50 million in various opportunities that have come our way. So we've gained experience. We've learned along the way. We made the mistakes. But now we're structured, we're well organized, and that is what is essential to making a syndicate successful. So also what we have in Ireland now as well is that we have a group called the Halo Business Angel Network. This is an organization that is responsible for organizing syndicates. So basically, what they do, they provide education and training to potential members who want to join syndicates. They provide deal flow into the syndicates. They provide potential members into the syndicate. And they also syndicate with other syndicates. In our case, for example, we invest typically, most startups raise their original investment is in the order of 3 million. And that is typically maybe 2 or 3 syndicates coming together with the VC to provide that initial capital. Without the syndicates, that's not possible. And having other syndicates to syndicate with allows you to go out and be part of that group. As I said, my own experience being a member of a syndicate has allowed me to invest in areas that I would never have known about. Has allowed me to get domain knowledge and everything from term sheets, from legals, and even understanding what goes on in the medical profession in some cases. So my recommendation to all of you out there is look at what is a syndicate can do for you. Join a syndicate that suits you. And over a period of time, by spreading your risk, you will definitely get a very good return on your investment. Thank you.
Thank you so much, Aidan. Appreciate your time this afternoon. And I think that's given us a really good overview of why one should join a syndicate. I know Andre on the call was asking a couple of questions, and one was the annual fee. Larry answered it there. There was around 2.5K. Is that the annual fee for
it varies by between 2,000 and 3,000 in most syndicates.
And the minimal ticket, is that, what is the minimum amount for investment?
We would recommend that anybody who joins a syndicate minimum amount should be around 20,000.
Fantastic. Fantastic. Thank you so much, Aidan, for that. We're now going to move on. By all means, keep the questions coming on the chat. Now we're going to move on to really delve into how one would structure and set up a syndicate. Now that you know why you should be part of a syndicate, our colleague and friend Donna Kiernan, who manages the Boole Investment Syndicate, which is based in Cork and has nearly 50 members, and has been investing since 2012, will now delve into a little bit deeper structuring a syndicate. Donna, you're very welcome, and I'll leave you the floor if you want to share your... Fantastic. Thank you, Donna.
Thank you, Finola. And Aidan has described an awful lot of the operation of Syndicate, and Aidan is a good friend and industry colleague as well, and has helped a lot on this journey. Right, so taking on, if you look at IRIS as a mature angel syndicate, we are very much in Boole, getting at the early stages of that. So not to go through the definition, but just to highlight sort of the sectors that in Boole, what we invest in, and I'll go through our journey to get into here. But we're in medical devices and life sciences, so we would co-invest and follow with IRIS, who would be lead investor in many circumstances, and Boole will be a smaller going into that same pool, if you like. And then also into climate tech and software tech companies. So firstly, to start where we are today, right? So we have 36 in-person members and a number of guest members who are coming in, trying it out, and probably another 10 in there who will, most likely, many of them will be members. And we're growing that, and I'll talk through that. We operate on the basis of regular pitch meetings and coordinating those investments. We have invested 2.1 million, slightly over, in 14 projects since June of last year. So, and I'll talk through the timeline on those. And we have 3 currently in the process of closing deals, which call for funds and so on. We have 4 to 5 in-person pitch meetings every year, and occasional onlines, which don't quite work as well. And then we're coordinating the evaluation of those projects, working with the lead investors like IRIS and others, and kind of facilitating those investments, but those transactions completely all the way through. And I'll talk through some of the structures and the agreements and the documents we used in those. And then ultimately getting to the exits, managing the exits, but managing all sorts of shareholder communications. If they're doing other things and sign off documents, we have to be available for those as an investor. We are reviewing 30 plus projects on a yearly basis. That's the rhythm we're currently seeing. Most of them are new, but there's many follow-up investment opportunities there as well. And we're approximately investing in about half of those. We're working closely with Access BIC as key partners, and they would source the projects within their network from various sources and evaluating those projects and helping us decide what to present to the group. So they're all high quality projects. We clearly state every one of the projects that are presented to the Boole Group get investment. As I said, we only invest about half of them, but they all are high quality projects, very investable projects. We also facilitate with regular reporting back. So like what Aidan mentioned, we have a deal lead similar to IRIS, but we don't have the power, the influence to get a board seat. But we have somebody who's monitoring and a communication point to every investment, and they're getting reports back from the invested companies and feeding it back into those who invested. We are, so as I say, with 36 and growing in-person memberships, we're targeting to have 50 by first quarter next year. And they're across so many different sectors, kind of different types of technical expertise and different backgrounds. So there's broad diversity in there within that group. We're also developing a number membership. So we do feel there's a practical limit on the number of in-person memberships. So we don't want to be too big. We want the community aspect to be strong and people helping each other on this journey and sharing their expertise on that journey. But we're allowing scale with having what we're calling a sidecar membership, for those people who may have the funds to invest, but not quite interested in getting involved in the evaluation of the projects. So they're effectively committing a certain amount of funds to follow on with the in-person investors. And then we're looking to, from the start, to develop a very lean organization. So, and I'll talk through the detail on how we did this and some of the early challenges and how to keep this moving along very swiftly and very lean as much as we can. Aidan highlighted a bit of the background in Ireland, talking about the Halo Business Angel Network, and starting in 2013 in that particular one. Kind of the Bool, the old Bool as we refer to it, investors, 12 million is the number we have in 50 companies in some similar sectors we are focused on today. And with a group of maybe up to 50 angels at different points. That was an informal network. In April 23, the Irish government went to market again and they changed the scope of what they're doing and they stopped investing in the evaluation stage. So consider that up to that point, there was a network of expertise in the marketplace that were sourcing projects, evaluating projects, and bringing quality in front of the angel investors. So picture these angels, they don't have much time. They have funds, they have an interest, but they have other things going on. They may be retired, they may be involved in their own businesses, they may have corporate jobs, but they have other things happening and they're precious on their time. So bringing on quality projects was important, but that was a decision by the government to no longer fund that. And that's where New Bool decided, okay, no, we liked the evaluated model. We liked easing the journey for the investors. And that's where we wanted to professionalize, if you like, the model. And Aidan was a great help in sharing sort of the journey with Iris. And we modeled somewhat heavily, I would say, on what Iris' positive experience has been. So we had decision points on this. This journey started for me personally, kind of looking at evaluating how to do this and involved with the key people involved in the Bool and how we're going to do this. And we decided to set up a not-for-profit company. So a CLG, Company Limited by Guarantee by Irish law, and a subsidiary for Bool nominees. And the not-for-profit organization it's not owned by any individuals. It's owned by the membership, if you like. And it has a subsidiary that facilitates all the investments, and that's where the funds and the transactions flow through. We decided on a not-for-profit because just to give that proper feeling of cause and why we're there. We're there for the members and we're there for the investee companies. We set up a board of directors for governance and compliance reasons, and we going to implement a full-on constitution on how that should flow, but that's still on the journey. In setting out the low-cost operations, so in the past, many of the agreements were paper, and we're asking people to print out these documents and sign with wet ink, scan them back and send them back, and that slows down the process. So one of the first things that for me coming in the door is how do we do this digitally? How do we look at the process, streamline all the processes, standardize? So once we get standard documents, get clear legal advice on how we should do this every stage of the process, and then how do we digitize everything? How do we get all agreements we can, as much as we can, kind of on a DocuSign type platform, signed electronically? It speeds up the process every step of the way, and it makes things easier for everything. Professionalize. So the past model was heavily voluntary based. When a deal comes to the table, a deal lead would be selected or volunteered, and they would do a lot of the work around the agreements. They do a lot of work on the evaluation of projects. They do a lot of work on chasing people for signing documents, getting the money into the accounts, and doing all the transactions. That was voluntary. That was a lot of work. And you couldn't have the same people doing that all the time. So then the standards varied, the process varied. It just wasn't consistent for people. And it was a big ask people are asked to do a lot of effort, and some of the deals can be complicated. And again, you're dealing with different types of investee companies. They don't always get the process right either. So you're having to work within that process. So in professionalize it came back to me. Today, right, basically, I manage the process. I manage the network, working with Access BIC and bringing in good projects, working through the process of the pitching, kind of managing the relationships, managing the commitments, managing the syndicate agreements, the investment agreements, and making sure that they were vetted, working with lead investors and other investors that's investing in that particular deal, and then managing all that process and then driving the growth. We operate on some very simple principles, and one is about making it easier for the investors. As I mentioned, the scenario, angel investors have funds, they have a choice in what they do with their time. We want to make it as easy as possible to do what they like doing, facilitating investments into new startups, and making it as easy as possible for them to evaluate, select, and to invest their monies. But also to make it easy for investee companies. Founders, it's a challenging time. They're trying to run their businesses and they're trying to pitch to raise investment. So one of the commitments we try to live up to, and we're doing okay, is from initial pitch to give them feedback and bring them through the process to give them commitment subject to diligence within 3 to 4 weeks. And to give them very good feedback and be very supportive to the process. And even those who were not successful, that we didn't get enough interest in the group to invest, to give them feedback that they can work on and be able to take that forward in what they're doing in their businesses. Because people are very open and sharing of their expertise and their knowledge and very supportive of the founders, of the promoters. Similar to Iris, we have an annual fee, an annual membership fee, and we have arrangement fees. Now, we do have a small arrangement fee that's paid by members, small amount, and sometimes by the investee companies. But then we do take a small profit on a small percentage of the profit on exits as well. And this is just keeping at a level that the organization is sustainable. And again, not for profit, and we mean it, but we want to be sustainable. To just talk through some of this is a standardized process we operate by. And there's a lot of complication in here, a lot of detail, but once we standardize it and operate this process, it moves along pretty quickly. So we're bringing sort of new investors into this process as well, and then they're educated on what it is to evaluate projects. They're educated on what it is to determine what they're interested in, how they'll spread their money, and how Aidan talked about sort of spreading the risk across multiple projects and so on. But then they're supported by, we call it experienced angel investors, veteran investors, on how they approach evaluating projects and then bring it through that process. So we have the pitch meeting, enough interest going into the deep dive meetings. We're working with the lead investors and their due diligence and outputs of their process. So it sort of minimizes our effort in due diligence, and sometimes specific expertise in our group might be able to weigh in and help on that. And then any negotiations on terms and so on and sign agreements. I would say in that and the legal agreements, we're a small investor mostly in the context of the whole deal. So we're not in a position to negotiate a lot. We have to decide if we like it or not. But we're in there understanding what the terms are and then to be able to facilitate the documentation and the process. And then we have a deal lead which is monitoring and keeping the relationship with the investee companies and then keeping that going forward. Everything on this was done by voluntary effort before we operated in the new Boole structure. The Boole team led by myself, we pretty much manage all this process down here. So it takes a lot of the pain away from what is the new role of our deal lead. The new role of the deal lead is very much the expertise, the representative group, but they don't really have to do a lot of the effort in managing the process. As I mentioned, our policy is minimize time and effort for our members to evaluate projects. There's the angel investors, to minimize the effort for the deal leads all along this and just streamline the process, and move the process on. From here, the whole dynamic of what we have here is how do we accelerate the number and the amount of investments, the amount in each investment and the number of investments. We're currently operating on the basis of 1 to 1.5 investment a month. As I said, we have 14 done in sort of 15 months, but given the number of deals we have, another 3 going through, we could do 16 deals this year. We want to see how do we increase that number, and how we increase that number is by bringing in more members, both in-person and sidecar members. So the more members we have, the more people involved and the more amount of money involved in each deal. Other initiatives we're looking at is we're here for the success of the companies we invested in, and we're looking at how do we develop a community to help the investee companies help each other, but also how do we let the angels act as members where they're interested and have particular expertise, and to be able to guide some of those companies. So look to build that particular community is some of the areas we're looking at in the future. And then to provide more reporting facilities, ease the journey, the process, kind of letting people know what's happening and how all that works. And kind of, and then using events. So we're still early in the journey. I'm 2 years into it, but we're investing in probably just over sort of 16, 17 months, and we have a lot planned, a long way to go. Thank you. I'm happy to answer any particular questions.
Great stuff, Donna. Thanks a million. All right. Are you enjoying it, Donna?
I think it's great fun. Yeah, I do notice that the website is down actually.
Yeah,
Yes.
I just saw it.
Yeah.
It is the correct website, but it is down. So
Yeah.
Another job to do, Donna.
Yeah, so you asked me if I enjoy it. I think it's great. You're working with fantastic people on both sides, on the investor side of it and on the investee companies. Kind of, it's great to see the quality of projects and the founders coming in, and you get greater satisfaction of bringing in new investors and helping them realize what it is to do this and the buzz they get out of it. They get great satisfaction of investing and helping these companies, and they're very, very keen to do more. It's regularly we're coming across investors. There's so many good projects. I can't invest in them all.
Yeah.
You know, but that's thus we get more and more members involved, that we can continue to support more and more projects. So it's very beneficial, and it's helping everybody here.
Good stuff. Good stuff. Okay, Donna, great. Thanks a million for jumping on and doing that for us, Donna. Really appreciate it.
Thanks, Larry.
Okay, great stuff. Okay, so look, we're going to have a little bit of a chat now with our panel here. So we've I think a very interesting panel put together, and a nice Ukrainian slant to it, thankfully. So we've Anna Magiera, who is the MD of Partnerships at iClub Global. Good afternoon, Anna. How are you?
Good. All good. Hi. Hello, everyone.
Hi there. And we have Andrew Zinchuk, who's a founder managing partner of Zaz Ventures. Good afternoon, Andrew. How are you?
Hello. All good.
Good stuff. Thanks a million for joining there as well. And we have Seamus Ivers. So Seamus is a very experienced angel investor, and also the chair of the Bull Investment Syndicate, which Donna has just spoken about there. So Seamus has a huge amount of experience in angel investing. Good afternoon, Seamus.
Afternoon, Larry.
Good stuff.
Must change that photograph there someday.
What's that?
Must change that photograph.
Your old photograph. Yes, yeah. Great. Okay, look, we might just kick off, folks. Anna, maybe just give a quick introduction to yourself and to iClub, and maybe a little bit of background about what kind of companies you guys invest in, what's the setup, what's the structure, what's the average ticket size, that type of stuff, please.
Sure. Thank you for inviting me. Happy to be here. So I'm basically I've been in the industry for over 18 years in different roles in investments and in startups. And for the last couple of years, I have been a part of iClub, global community of over 5,000 angels that is powered by TA Ventures, pre-seed seed fund, a global pre-seed seed fund. So we've been, as a syndicate, we've been around since 2018. And since then, we've built a portfolio of 94 companies. And we have invested over 70 million, and we've done 11 exits already, bringing to our investors 15 million in returns. So basically, we, as of today, we are more focused on early and growth deals. And that's actually been possible thanks to the thing that we are connected to the fund, the Ventures Fund, that actually takes all the risks on pre-seed and seed stage, investing into the companies. And then when the companies have already gone through this, value of that, and they have built the traction, and they have got to the point when they are ready to, I would say, to scale. So at that point, we present the companies to our investors in iClub, so that they have the opportunity to look at the more mature companies, the companies that already have results, that can show them, the financials, it can show them real clients, the product, etc. That makes the decision more informative, I would say, and less risky for the investors. And of course, that I would say bring the liquidity event closer. And the period till the holding period for investors is a shorter one. So that is also important for retail investors. And we've been on a mission to democratize the angel investing, and that's why we've first of all we've built our own application, our app, the financial product that actually helps investor being anywhere in the world, because we have investors from over 42 countries today. So being anywhere, anytime to easily access the deal flow, review the deals, commit. Go through the QIC process, and then sign all the documents and pay the invoice, and actually see the company in the portfolio, and then get regular reports on the portfolio that they are building. So that's basically the tool, the digital tool that helped us a lot to get to completely different, I would say, scale of growth, and that's how we get to this 5,000 investors today. And also as for the checks, so today we invest the minimum check is from 5,000 to 10,000, depending on the size of the allocation. And as I mentioned, we have more of the growth deals. So for growth deals, it would be the average ticket would be 10,000, and for those that are still a bit earlier, 5,000. And as I mentioned, we are powered by the fund, and we are investing in the fund portfolio and the companies that have been selected by the fund. So we are following the fund's investment strategy, right? And that is basically being global, investing all over the world, and investing into tech companies. And as for the fund is industry agnostic. Of course, we have favorite verticals like digital health and biotech, like fintech, and direct to consumers. So these are the verticals that we have built strong portfolio in. But we are very open and looking for new opportunities as they come along. So yeah, that's basically me, and I would leave it to the others to continue.
Excellent. No, that's great. Thank you so much. That's very comprehensive. We might come back and maybe talk about the digital aspect of the offering in a while. And so Andrew, maybe just the same type of intro for you as well, please.
Sure. Hi, everyone. So my name is Andrew Zinchuk. I'm founder of Zas Ventures and Zas Angels. So I run basically two vehicles. We have a venture fund, US-based, focusing on Ukrainian founders. So we are probably one of the few who focus particularly on Ukrainian founders. So fund is doing pre-seed deals, and now we're scaling also to pre-seed and seed with our fund too. As to the Zas Angels, so we are a group of now 70 people. So we invest along the fund into deals that led by fund. And then on a pre-seed stage and seed, later seed, we invest solely as Zas Angels. So typically our check is from 100,000, from 100 $500K to $1 million that we invested so far. Yeah, and basically we are the group of, it's like global. So we don't go for masses like for retail investor. So we're looking for like high sophisticated investors who have experience, who are executives, C-level, or those who want to create next category leaders who can, besides the money, they can bring also some value to the table. And that's kind of the people we are looking into the syndicate. And then all leads are going through the venture fund team. So we're doing the diligence, doing the deal memo. Then we also give syndicate members opportunity to speak to the startup, ask questions directly based on our deal memos. So, and we'd also take board seats, kind of. So we are very hands-on, I would say, in that sense.
Very good. Okay. So the ZAS Ventures and ZAS Angels are connected in terms of anything the ZAS Ventures fund is investing in. ZAS Angels also get an opportunity to invest in that company.
Yes, so we share the same pipeline, so it goes all through ZAS Ventures, but then we invest from the fund, and we typically invest in if we are the only investor because we sometimes invest like super early. So we invest in tranches per KPIs. This way we kind of mitigate the risk, but we also take mirroring position for ZAS Angels, so they can invest a little bit later once we deployed all of the tranches from the fund and the startup is performing well. So then we give opportunities to angels also to kind of double down.
Perfect. Okay, cool. That's great. And Seamus, so Donna's kind of given us a bit of a good background to the Bull Investment Syndicate, which you've been part of for a long time. In fact, chair of the old Bull Investment Syndicate, and you've come on and continued as chair in the new Bull Investment Syndicate. So kind of maybe apart from Bull, just maybe an introduction to yourself and your own personal history in terms of investing, the kind of amount of deals, the types of things that you've got into over the last number of years.
Yeah, so look, I've always, since I started a company straight out of college, did a few sales and buybacks over the years. Eventually got out of it and retired about 3-4 years ago. Was involved in angel investing for about 6-7 years before that, and have done a lot more since. So about 70 companies in total with 14 exits. And I suppose the earlier exits gave me the confidence to go forward. The kind of description I would say is that, whatever your standard amount is, if you were getting to an exit, you've probably had at least 2 tranches, if not 3. So if you do get a good 10x return, then you're 30 times your number, and that means you can in theory do 30 more companies. Of course, it's never exactly like that, and usually the money is paid over a period of time, et cetera, et cetera. So, but overall, so far, I'm okay with it. It's a long tail business, so who knows what it'll end out at the end. But as Donna said earlier there, it is enjoyable to some degree. I described it as like putting an old dog with a young dog. You kind of get a bit of a gist from getting fresh ideas and kind of back to where you were when you were younger yourself, but you don't have to do all the hard slog, right? You're letting someone else run with it for you, kind of thing. They take the bone, they run around the field, bury it, and all that, and you can go back and dig it up later. Okay. In theory. So and that's really it. So I do a lot of support work on the Bull Syndicate because I've been there a long time, and have I learned a lot? Some, I tend not to invest in family businesses. It's too difficult for an angel investor to be stuck in the middle with family relationships if they go wrong. And more and more it's the people rather than the idea that's important. It's very rare you see an idea that succeeds when you have an idiot in charge.
Yes, so true. Like the first workshop in particular, I think some of the other keynotes referred to it there as well, Seamus, that an angel brings more to the table than just cash, right? But you've 70 investments done, so you can't be involved in every one of those investments. So
No, well, I'm what I would classify as being a promiscuous investor. I nearly invest in anything within reason, right? And yeah, I don't intend to get stuck in them because I am retired and I don't want any executive responsibility. But that doesn't mean you don't get called in. So, like, I've been involved in all aspects, even up to calling for companies to go into examinership. Um, so you get the good and the bad. And I always say, look, these are the things I think I'm reasonably good at. If you have a problem in this area, give me a shout and I'll tell you everything I know about it. But again, unfortunately, when you're working for yourself, you're kind of somewhat. So, like, I always build my own businesses. So you're focused on building your own business. You mightn't learn as much as you would if you worked through 7 or 8 different companies and different corporates where you're making all your mistakes with someone else's money and you're learning from their procedures, processes, and all the other things that they've got over the years. So everything you learn is based on your own experience. So I always say, look, I only have the experience of the companies I built and sold. That's it, right? And now of learning through investing in but I have things I think I got good at. But I always qualify it and say you still got limited scope of knowledge.
Yeah, I think that's very, very honest and very fair. And I just kind of come back to you there. You mentioned that iClub is powered by TA Ventures. So just tell me a little bit about what does that mean? Are they a partner that are kind of managing deal flow and stuff for you guys, or how does that work? Because that's a super important part of where deal flow actually comes from.
Yeah, absolutely. So basically, the fund is producing the deal flow for us, and the fund is responsible for due diligence and for for all the negotiations. And actually, the iClub gets the allocation, right? That is already kind of closed. I mean, like, signed for us, right? And everything is kind of prepared. And the founders, they are also prepared to be collaborating with us, so they are open to be collaborating with us, etc. So that's a very important kind of prep work that the fund is taking over, and and of course, so there are basically two kind of deal flows. The first deal flow, if this is early stage, that the fund is coming in for the first time, and we are presenting this simultaneously to the iClub. So that would be kind of the fund and and iClub coming in together as partners. Or if it is growth stage, that would be the portfolio company of the fund already, and the fund would be sharing everything that they have gathered on the company, so to say, right, and all the reporting, etc., so that we would be fully prepared to present the company from all possible angles to our investors. And the fund, the important thing is the fund is the kind of interested party here to bring the company to the best result possible, because the fund only gets real returns when the exit happens. And basically that's the important, I would say, thing for our investors, that the motivation for the fund is basically the same as for the every single investor in the syndicate, that we want to get to the best possible exit, right, and to get as many access as possible. And only in this case the fund and iClub would get anything, because the management fee, it's kind of peanuts, only for covering the legal and financial team procedures, etc. So it's not something that and basically we are coming in as partners, right? The syndicate and the fund, so we are coming in as partners. And even if it's growth stage, so in many cases the fund would be still having the pro rata, or still being the part of the company, being a shareholder of the company, right? And then the iClub would be stepping in as a partner as well. So that's how this powered by works for us.
Perfect. Okay, that's very interesting. And then Andrew, it's a similar type of structure with you guys, with the relationship between ZAS Ventures and ZAS Angels. But you might tell me a little bit about do the angels get a chance to see the company pitch? How does that work with SaaS angels?
Sure. So how we operate, so we have quarterly pitch meetings. So it's kind of a digital event. Like last one we held in July, so we presented 6 companies. So 4 were our portfolio companies, pre-seed stage, now turning into the seed raising new rounds. And then 2 were seed stage deals that we have missed to invest from the fund. But I've been tracking founders for years. So another feature of ours is that before investing, our philosophy, we have to build relationship with founders. So for the fund, it's up to 6 months of tracking, right? So in some deals we've been tracking like for 2 years that we've invested. So we don't jump like when they come to us and saying, hey, we're closing the round, there is 25% left, and then like blah blah blah. We don't buy into this. If we haven't built a relationship, it's not for us. So we have this basically quarterly demo days. Also in the parallel, we have like town hall meetings with founders. So once we gathered enough interest, we also hold a meeting where people can just simply look in the eyes in the founder, get some energy to understand whom you're investing. Because one thing is like reviewing all of the deal memos, documents, and stuff. That's one thing. It's kind of relates to your brain, but then also it comes to the emotion, because investing is also about the emotion in a sense, right? And for us, there's like 2 rules: no assholes and no Russians. So we don't take assholes, neither with money, neither to the portfolio companies. I want to have everyone around me, and this is kind of managing the money, right? I'm taking responsibility. I'm investing my own money, but I like my kind of privilege is actually to define people I want to see around myself, and to manage this. It's even statistically speaking, it's more long-term relationships than marriage, right? Because it's like for up to 10 years, and the marriages are lasting way less. So I want to have like cool people that I will be, even if I lose money, I would say, hey, I backed an amazing founder, but it was a good shot. But there was, and I want to know that founders did absolutely everything possible to make that work as well.
Yeah, it's so true. We always say it is a marriage, but it's a marriage with a planned divorce.
Yeah, it was you already have financial plan. If you divorce, who gonna get what? It's like if people get married, they should in the beginning actually discuss how things gonna be if they're gonna get separated.
I hope most of mine don't go past marriage thing, as I'm 40 years married, so I'd be in deep trouble.
That's a long exit, Seamus.
It's a long exit, yeah.
If you're waiting that, yeah. Maybe Seamus, we're going to bring in a pitch. We're going to see what a real live pitch looks like. And I want you guys to when Ole has finished his pitch, to kind of ask the type of questions that you would ask in that situation, but it just kind of reminds me, Seamus, of kind of COVID times and going, we went online for a period and now we're back kind of in person, and we do kind of hybrid. What's your kind of feelings on that? Like it being a live pitch event, hybrid versus in person. What's your take on that?
My view would be I rather see people in person, just see how they react. It's even how they come in and how they dress. It's if you're coming in to present to a load of people looking for money, I've seen people coming in looking like they come in rags. And while I understand the casualness of stuff, particularly in software, maybe I still don't see any reason why you can't at least put on a shirt and some sort of a jacket or something. And also just the way they react in the room. Some people get very nervous, and just like to see that and how good they are at presenting. Because in the end game, they're going to be doing this to customers. And if they're not able to present their own thing to a crowd of investors, they're not going to be able to present it to investors either. And you can't see that on the web.
Yeah, no, absolutely. And it's true. And I think it's been interesting actually. Like we do offer hybrid or in person, but it's 80-90% in person preference. So people people kind of vote with their feet. And before we go to the pitch, I might just come back to you finally. I'm kind of interested in your phrase, democratizing angel investing and using this digital platform to do that.
Yes.
So how do you like, I like the sound of that, but then I'm also kind of concerned that going on from what Seamus said about this being an in-person kind of, it's kind of a contact sport, you know. So firstly, in terms of seeing the pitches and interacting and deciding whether to do that, but also we get a lot within the room in Boole. When the company leaves, we discuss the company. We discuss, you know, what do you think? What about this? What about that? So how do you kind of digitize that, or how does a platform solve that?
So well, we have a full flow when we present the deal on the platform, and then within the next couple of days, we always have a call with the founders. And the partner, the partner from the fund who is leading the deal, which is important. And we have kind of, the call is divided into two parts. So the first part is not just presenting the company as it is presented in the deck, right? But more going deep into the specifics, into the products, and kind of, you know, I would say sharing all the insights that would be, you know, could be shared with potential investor. So it's very in-depth conversations with founders, which are moderated by our team. And then we have all the questions from our investors that we address during the call, and we try to get into, you know, to put the deal in front of them in so many details as possible. And then the second part of the call is the part when the fund shares their investment rationale, right, and why they have, you know, decided to invest like in the first place, and why is it good to still invest in the company today, for example, if it is a growth stage, and also sharing what is the vision from the fund standpoint on when are we going to exit, and what might be potential exits taken into exits taken into account, what is happening in the market, you know, the reference deals, etc. So we are sharing all of that. Of course, with the disclaimer that this is our expectations, right? And what we see from the standpoint of today, and seeing the market, what is how it looks today. But still, this is very important part of information for our investors. And then all the questions that investors have, they could we have different channels through the app or through the the channel, the messenger, so they can ask any question in the app actually, and get the response from our team on any aspect of the deal. So that's basically the flow that we have, and we are now putting more and more optimization of the process, you know, that we are like using all the data that we have in the company and feeding it into the app, and so that the app can provide, you know, the basic information very seamlessly, and then the specific questions would be then answered by the analyst team and by the like, you know, consulting the founders or whatever. So that's what we believe is important, because yeah, like having investors from all over the world, it's difficult to have the you know, offline event and have them all in one place, and with all the founders from all over the world, you know, it's too complicated. But for example, in our case, the fund has this part, because the fund, the team is actually like they are divided, and they are partners in every geography that is important for us, and that is where we are looking for deals. And they are there, like, you know, on the ground, so they can meet the founders, and they are doing that on behalf of our syndicate. And then this conversation that we have, the deep dive calls, they give the opportunity for the investors to talk directly. I understand that's not the same as when you meet the person in the same room, but I have been moderating these calls for a while, and you know, if a person can't, you know, do that like online, because you feel the energy online. If the founder is open and ready to share and ready to provide insights and is humble and is, you know, smart, etc. So you see that, you feel that, you have that, you know, chemistry. If it's not like that, even through the screen, you feel it and you see it, and that's an important part. And we always invite investors, even if they are not investing, just to participate or to watch the recording so that they can get the the sense of it, which is very important.
Yeah, it's true. It's true. I think it's all like the energy, I think, will normally be very good from the founder. I think online it's very difficult on the investor side to keep engagement and keep often. Cool. Okay, that's really interesting. I'd love to pop on and download this app and give a look at it. Sometime it could be really interesting, I think. Great. So Ole, thank you, and apologies for keeping you waiting there. So how are you?
Yeah, really glad to join this amazing event today. Thank you for the invitation.
No, thank you. Thank you. So look, you're going to pop on it, and you're not opening your investment round until 2026. So you're kind of test running the pitch, so to speak. But I know you've done this several times through Techstars and different accelerators and stuff already. So look, I'll hand the floor over to you. You can share your presentation. I think it's going to take about 5 minutes or so. And we'll just come back to Seamus and Anna and Andrew. And we're going to kind of put you through your paces a little bit, maybe ask some questions that you would normally get asked in a real investor pitch scenario.
Sure, let's treat it as a real world scenario.
Yeah, exactly.
Cool, sharing a screen then. Is it good?
So it's just, it's up there now for me. That's good.
Good stuff. So large language models today are changing the world of technology, and StackBob is leading this change with its AI agents for managing employee access to all business apps. This is Bob. He's an IT admin at a mid-sized organization. And every year, Bob spends more than 500 hours on manual access provisioning, deprovisioning, and access reviews. His company is wasting over 100K a year on unused licenses and subscriptions. And just one overlooked access or a compliance gap can cost them over $4 million in case of a breach. Even today, Bob's company is using over 100 tools, but in a few years, number of internal custom tools built with AI is projected to skyrocket. So it's going to be even more work for Bob in the future. And of course, Bob was looking for a solution, but all the existing platforms were built on a previous generation technology and have three major drawbacks. The first is a so-called API and SSO tax that can easily double or even triple Bob's entire software budget. That's because every tool in Bob's stack would need to be upgraded to an enterprise plan just to unlock those hidden API and SSO integrations. Then the setup would reportedly take up to 12 months and would require skilled engineers. But even after spending all this ridiculous amount of time and money, Bob can still end up with up to 50% of his stack unintegrated, because most apps just don't have those protocols built in. As a result, not only Bob, but 84% of mid-sized companies are forced to perform employee access management manually. To change this, we created StackBob, employee access management platform powered by AI agents that can easily integrate with any app in minutes and doesn't require API or SSO to do this. StackBob can automatically discover all your apps and users and create a central directory. Then it automates employee onboarding and offboarding based on pre-built user roles, safely stores and manages passwords, secrets, and multi-factor authentication, and even detects and removes unused licenses and subscriptions. StackBob's superpower in the unique technology, a proprietary cloud-based agents that are used instead of APIs or SSO. As a result, StackBob offers over 300,000 integrations and a very quick setup. On top of that, cost of ownership is just a StackBob subscription. You don't need to spend a ridiculous amount of money on upgrading every app in your stack to enterprise plans in order to activate those integrations. And this is a true billion-dollar problem because employee access management for small and mid-sized organizations isn't solved across the globe due to the problems we just reviewed. StackBob entered the market about 3 years ago from Kyiv, Ukraine. In 2023, we entered the US through Techstars Seattle Acceleration Program, and today we are expanding to UK and Nordics. Our customers range from small startups to companies with few thousand employees, but all of them love the product because it eliminates huge manual hassle, resolves security and compliance risks, and even cuts their software costs by detecting and removing redundant stuff. My name is Ole. Jarek and I previously worked together at multiple B2B startups where we faced this problem firsthand. But specifically at the previous startup at Leap.io that we joined at early stage and helped growing it to a $100 million exit in 2021. And today, supported by industry experts, exceptionally strong team, as well as Techstars, Google, Seeds of Bravery, and other amazing organizations, we are set to make StackBob even bigger success. Thank you very much for your attention. I'm really glad to hear your questions.
Excellent, Ole. Thanks for that. Okay, so we might just have, I think we've about 7 or 8 minutes for questions here. So Anna, I might bring you in first there, please.
Thank you. Thank you for the presentation. The first obvious question would be, could you share more on the traction that you've got, like in Ukraine and in the US and now in the UK? Thank you.
Yes, at the moment we have 50 customers. They range from like small companies with like 5-10 employees to large organizations with 3,000 employees. So it's pretty scattered at the moment because as we grew, we tested different channels. Like we got, honestly, most of the customers get through referrals and the network. We tested some outreach campaigns. We tested going to events, which also help. But at the moment, it's quite scattered. And the goal right now is to get more unified set of customers. And we are targeting specifically mid-sized organizations from 100 to 500 employees. This is our like golden ICP for the moment. Yeah, the goal is to get to predictable growth and predictable channels that can generate us customers on a like predictable scale.
Thank you. And maybe just a couple of words on the unit economics with the customers that you have now and the traction that you have now. How does it look like?
So we charge the companies based on their size. Depending on the number of employees that you have, we just multiply that by price per employee per month, and that gives us a subscription cost. Being early stage startup, it's the most like challenging part is to get the customers because we are playing in cybersecurity space, and the biggest like challenge for us at this moment is trust. So one of the most successful like channels to the point where like referrals and from either from network or from existing customers, and like for those customers, it's pretty difficult to say like what is the acquisition cost, right? Because it's not like that you run like ad campaign for like this amount of money on LinkedIn or Instagram, and then you can just calculate those costs. Then the second channel, which is like events, again, it's ranges. If it's like some delegations we get from like Ukrainian organizations or from others, it could be like free events for us, like virtually free, right? So again, at this point in time, it's like we're not focusing on defining very specific like customer acquisition cost because it's still early stage. But that would be the goal for like the next year, where we're gonna raise around and get into those like larger spend on acquisitions, including like more events and probably some paid channels as well.
Good stuff, Ole. Anna, thank you so much for that. Andrew, I might come to you next there, please.
Sure. Hi, Ole. Good to see you.
Good to see you again.
Yeah, we've been following the startup since 2023. So the question I would like to follow up on this actually question in terms of metrics. So what was your so you said you have 50 clients as of now, right? So what is the ARR for the last year? What's the MRR this year? What's the growth of MRR month over month? kind of this way, because it sounds to me like you haven't figured out go-to-market strategy. And so what is your go-to-market strategy right now? Who is more specific, your ICP? Is it then just, what you mentioned, what are 50 to 100 people? And what's the biggest challenge for you right now? Because I think you have a little bit struggle with the growth.
Yeah, thank you for the question, Andrew. Definitely the go-to-market strategy is one of the biggest challenges for any startup, at specifically at the early stage, including StackBob, right? So we're still figuring that out. Because our industry or niche, which is cybersecurity, it's a bit different from other industries. You cannot just load a ton of money into LinkedIn ads or Instagram ads and just got predictable number of customers out of that, right? So we're still figuring that out. One of the biggest challenges is trust, and to build trust, you just need to be on the market. You need to be present at the events. You need to be doing PR. So people just need to see you around, that you are real people, that you are year after year constantly basically offering your services, increasing number of customers. And then in the future, it's just like this effect starts to work, right? So you get your brand recognition, you get the trust. At this early stage, it's still difficult, and that's true. As for MRR and ARR, we don't share these numbers publicly at the moment because we have customers on different offers, right? So we have some customers on pre-discounted plans, others not. So we just don't want to share this number.
It's aggregated number. We're
Yes.
not asking account per account. So what's the aggregated ARR?
We can talk about that in person if you're interested.
Okay, so just one follow-up question, so which relates to, you mentioned several trusts. So how you gain trust of the customers, because you collect all accesses to their tech stack. How do you protect this, and how do you ensure that their secrets and access to their tech stack is actually securely placed?
Sure. So the first thing is that we communicate this everywhere, that the cybersecurity is in the core of our product, and all our architecture is zero trust, and we pay enormous amount of attention to this. Then we do the third-party audits and certifications in terms of security compliance, including SOC 2, ISO, and the third part is just getting customers, getting reviews, getting case studies, and then just being on the events, being around, so people know us, and then after some time, people are ready to try the product, and we typically roll out trials for small amount of apps, and then they test it and see how it works, and then if they feel comfortable, we roll out it for the entire company for all their apps.
Perfect.
Thank
you. Sorry, Andrew, I think that they're really good questions. I just want to let Seamus in for one, and we need to finish up after that then. Thank you.
Yeah, I'm beginning to think that I have none left.
Sorry.
I suppose I have two actually. The 300,000 integrations there would kind of cause me to balk a little bit and going, that's an awful lot. How can you how can you claim that? Especially if only 50 clients. And the second one, I suppose that would naturally lead me to start kind of looking at the engine. I'm an engineer by trade, so I tend to really like to understand how things work when they're doing this, right? So I'd be following through on that to exactly how you do these integrations, etc. But it's too short here. And then the other one, who do you sell in an org? Because you mentioned cybersecurity, and I'm kind of going, I see yourself as selling to somebody like me, going, as the CEO, kind of, you have all these licenses, you don't know what you're doing with them, who has access to do it, etc. You're totally relying on one guy, Bob, in the organization. And how does the CEO get independent validation that all these licenses have been managed correctly and not have? And so I think it's more management level sell than a cybersecurity sell, but maybe I'm wrong.
Depending on the size of the company. But yes, great questions. So the first thing, 300,000 tools. This is our marketing communication, under which we promise to every customer that we're going to cover all his apps without limitations. So, and this is a huge differentiator because all the existing solutions on the market, they typically can cover like 20, 30% of the tools being used in terms of direct integrations and then collect information about users, licenses, automate provisioning, deprovisioning, only for the main tools. But all those like long tail tools, it's not possible to integrate those with traditional solutions that are on the market. And our promise to the customer is that we can integrate 100% of your web-based applications. So if there is a web interface where you manage your users and licenses, it can be covered by our agents, which can be trained to integrate with any web application. And as a result, we are talking about 300,000 integrations or even more, which literally says like all of them.
How do you do that? Was it by key logging or something like that? That you're automating the administration access process or something? If you don't have APIs.
Could you please repeat that?
If you don't have APIs, how are you actually doing that?
So this is a browser-based automation.
Okay.
The agents are running in the cloud, in the browser, and just do it as a person would do. But
yeah, so you're back to the old style keystroke generator.
Kind of.
Yeah. Okay. Yeah. So okay, that answers the question about how, and then obviously you have the issues with security and that, and how it cannot be intercepted. So going back to the people you're selling to, you know, if a 500 person org, I definitely think you should be selling to a CEO or someone like that, CIO or CEO, but not someone who's doing the cybersecurity stuff, because they'll have 101 questions, whereas the CEO will be going, this sounds like you'll get rid of a risk for me.
Mm-hmm. Yeah, I agree.
Great points. Yes. So if it's a smaller company, then the CEO would be still interested and involved. If it's a larger company, then typically there will be more like CIO, so Chief Information Officer, or Chief Technology Officer, or sometimes Chief Operational Officer, or just head of IT or IT director who would be responsible for that. But in the longer term, in the longer play, we see this also valuable for security teams at larger organizations. But our go-to-market strategy in terms of like the future, so we start with smaller companies and helping them be more efficient by detecting all the redundant stuff, by automating IT processes, and helping them save money even, right? So this is how we start. And as we grow, we can enter larger organizations and then help them with security compliance, because our platform is collecting all of the logs when the access was provisioned, by whom, when it was removed, and then collects all the evidences required for security audits. Like in the longer run, it's more like security team sell. But you're absolutely right. Like right now, we are more like management and business and IT departments. That's our ICP.
Perfect, Ole. Thank you so much, and thank you for coming on and being a good sport. And I think you got some really good questions there. I think this is very typical of you know, some tough questions after a good pitch. So hopefully you got some benefit from that. Andrew, Anna, and Seamus, thanks a million for coming on and helping out today. You're more than welcome to stay on, but you're free to go now if you want as well. But I'm just going to invite Jacopo Loso. Jacopo is the Director General with EBAN, the European Business Angel Network. And Jacopo is in a very busy period at the moment, getting ready for EBAN's big summit in Brussels next week. So we are especially grateful that you take the time today to join us, because I know things are going to be crazy busy for you, Jacopo, at the moment. Anyway, hope you're well. Good evening to you, and I'll hand the floor over to you, Jacopo.
Good evening to all, and thanks so much, Larry, for the kind introduction and for inviting me and EBAN to say a couple of words about the work we're doing to foster angel investment around Europe and also connect angels. So in the next 10-15 minutes or so, I'm going to try to walk you through a little bit about what we do And in the second half of the presentation, I want to show you a little bit how the business angel market in Europe looks like and how it has been evolving over the 25 or so years we've been keeping an eye on this industry. Let me get my presentation on the screen first of all. Just bear with me 1 second. So I hope you see it. EBAN's the name, European Business Angels Network. We're a non-for-profit that got started in 1999 by a group of pioneer angel investors, people that in the late 90s were investing in technology companies. I'm not sure they were referred to as startups yet. And they basically set up EBAN as a pan-European community to work with colleagues in other parts of the continent that are like them doing angel investments. And the whole purpose of actually starting this association back in the day was really to spread and divulge the culture and the professional standards how to do angel investment, far and wide. So a lot of the work EBAN does really has a lot to do with basically helping, enabling, supporting investors and angel groups to be ultimately more successful and more professional in how they invest. And we coordinate a variety of activities that I'll get a bit more into the details of in a moment. Besides being an association that fosters investment, that connects investors, we're also the representative body representing angels and other early stage investors towards the EU institutions. What does that mean? So we're basically representing the market of angel investors towards the policymakers, and we're supporting new legislation, reforms of current regulations, and also setting up instruments that are all targeted towards the business angel audience. And we're basically supporting EU entities in designing and in developing such schemes or regulations so that they actually do good and make a positive impact on our industry, on us as investors, and also more broadly on the startup founders that we support. And last but not least, the angel investment in Europe accounts for roughly 1.5 billion euros of investments made every year. This is the amount of capital that is deployed by angels that are part of clubs, established entities, and we monitor this market every year also for the sake of representing its interests towards the policymakers. A couple of words now on the network that we have at EBAN. So we're a membership-based association. The bulk of our community is consisting of angel networks, BANs, B-A-N, who make up really the bulk of our network. As you may know, business angel clubs are basically for-profit or non-for-profit entities that usually on a local level or at times at a national level coordinate the investment activity by basically facilitating matchmaking startups that are looking for funding and facilitating syndication activities among multiple angels that are affiliated to those clubs. So those are the actors that make up most of our community. And yes, they are scattered predominantly around Europe where we have a footprint. But as you can see a bit from the map, we also have members in different parts of the world beyond just the European continent. We're present also in parts of Central Asia, the Middle East, North Africa, and the Americas. Now, several years ago, EBAN expanded its membership to also include other entities that are part of the, let's call it the early stage investment ecosystem. So besides angel networks and federations of angel networks, we also welcome in our community VCs, specifically those investing in the seed stages of a company's development. So similar stages to when angels are investing. We also have actors such as funding platforms that are facilitating the investment activity of accredited investors towards startup companies. And then we have a variety of other actors which are more supporting and enabling either the investment activity or startup entrepreneurship, broadly speaking. So those are kind of our incubator accelerator members, our governmental entity members, and our associated members. Now, the value for IBAN is basically the access to the global network that we've been building up over the past 25 plus years around not just Europe, but also beyond, not only through our direct members that we have scattered in different parts of the world, as I was commenting earlier, but also through the partnerships that we've established with angel associations similar to ours in different corners of the world. So I bring some examples with our friends in North America at the Angel Capital Association in the US and at the National Angel Capital Organization in Canada, where we have also through IBAN direct reach to angel groups and angel investors in those parts of the world as well. And of course, on the African continent, where IBAN was actually responsible for helping the launch of the African Business Angel Network, ABAN, which again gives us as a community solid partners and trusted people that we can work with in different parts of the world. The benefit for being a part of IBAN is not just for the entities that are affiliated directly to us, that are paying the membership fee to be a part of this network. It's also for the individual angels that are part of those clubs, that are part of those networks, members of IBAN. So we extend a variety of activities also to them. I would like to highlight our events, which are, I would say, premium opportunities to network and connect with really trustworthy and serious people that are investors like you from different parts of the world. So we host 2 big annual events. One of the 2 is keeping us particularly busy because it's happening already next week in Brussels. The other event is an event that actually was hosted by our friends hosting this webinar here this evening with us, which is the annual Congress, which had the pleasure of also visiting Cork. I believe it was 2022. And those are just examples of our 2 big annual events that we celebrate every year, which then go and are complemented by smaller events that we host throughout the year, usually on a vertical sector focused basis, or anyways with a thematic focus. And this is all, again, to promote networking encounters between angels, and not just those. We're actually doing a lot of networking activities as well for the operators of the angel groups. So we call them the Business Angel Network Managers. So it's people that are enabling the day-to-day activities within an angel club. We foster cross-border exchanges of knowledge, as well as networking between those professionals that operate angel groups. And then finally, powered through several European Union funded projects, we're also doing a lot of activities that help founders, startup entrepreneurs to basically network and meet not just the other founders, but also meet investors that maybe might be a good fit, a good match for the startup that they're leading. So those are some examples of our networking activity. As I was sharing before, we're doing a lot of work also to share knowledge. And so we organize best practice sharing sessions, be they online in the format of webinars, or be they offline in person in the format of workshops. We're catering to not just the investor audience, but also to the network managers and the startup entrepreneurs. And we're regularly putting together activities which basically share the know-how from one or more experienced actors in the community, and they share that knowledge with those participating in our activities. So at any given moment in the year, be it online or in real life, there are a variety of best practice sharing activities that we're facilitating for our community members. And then we, last but not least, as part of IBAN, as part of this association, our members and the investors, part of those groups, also get access to a variety of offerings and discounted activities, events, and software products that we have been able to negotiate really on behalf of the community members to make full use of and enjoy. So we have about 40 partnerships with international conferences all over Europe, big names like VivaTech, GITEX, and similar. And we also have a series of software tools that can help angels in their day-to-day, be they for portfolio management or for screening and sharing deal flow. We have a selection of products here that are extendable to you. And like I was saying, our main and last benefit is really that we are representing also your best interest towards policymakers. So as part of that, we're organizing next week our big annual event in Brussels, hosted at the EU Commission, where we basically make proposals to the EU on specific things that not just the startup investment community needs, but also the founders need. I'll talk a little bit more about that in a moment. Before we go much further, I wanted to take you on a little bit of a journey and look at how the angel market around Europe has developed over the years. So this infographic was taken from a magazine published in 2003. And this is the count of all of the clubs that are existing at the time in Europe. And you can see in 1999, at least on continental Europe, angel investing was not at all known, or but maybe just some sporadic examples around the countries. And a lot of the angel clubs and the activity was really only in the UK. And you can see a lot has changed in little time, but I think this graphic that we have here really explains even more the growth of the angel ecosystem around Europe. So today there's roughly 340 or so clubs of angels active around Europe. That's a number we collected in 2023 when we did our last demographic kind of analysis, counting up the various networks around Europe, around the entire European continent, broadly intended, not just the EU. This count does not obviously take into consideration the many angel syndicates that exist, which, as you know, can exist as a group of 2 or more people that decide to co-invest with each other in 1 or more deals over time. This is not taken into this number. What you're seeing here is just the population of clubs like Halo Business Angels in Ireland and similar, that are effectively the networks where angels go to meet other investors and to meet startups that are investment ready. You can see angel investing has grown quite a lot, especially I would say in the early 2000s, where the movement started to go much more mainstream, and then began to consolidate a little bit, let's say from 2010 onwards, where many angel groups merged with each other, some closed down, some new ones got started. During COVID, there was a little bit of a drop in activity, with a lot of clubs not really continuing too much their work. And nowadays, we're basically seeing this number more or less stable at around the 340, 350 mark. Now, this chart here shows a little bit how the European market looks like. So as you can see, there are some big players out there. Of course, the UK, which already in the late 90s had 50-some clubs active, and today is accounting for roughly 300 million euros invested through many clubs of angels in the startup ecosystem. Many other countries that are notable here on the map include, of course, the bigger players: Germany, France. Finally, also my home country, Italy, starts to have a color that's not a super pale yellow. Spain as well is a very established angel market. And these are, by the way, the amounts in euros deployed by business angels, part of angel clubs, part of angel groups. That is the funding that we can realistically count. And it's underestimating, of course, all of the angel activity that is not happening through clubs or not documented at all. So we believe this 1.5 billion market that I talked about earlier is very much just the tip of the iceberg of the overall angel investment activity happening in Europe, which is non-quantifiable specifically because the data is not really shared or accessible to the public. A couple of other things about the growth of angel investment over the years. The population, we've been tracking that since 2011, has also grown, coupled with the number of new angel clubs started and growth of the angel investment activities within those clubs. More and more people have began investing. So we're estimating at around 45,000 people, plus or minus, the individual angels affiliated to clubs or angel groups or associations. Again, not everybody that is angel investing is necessarily part of a group or a club that we're counting into these figures, but this is just to give you a bit of an understanding of the population that is doing angel investing within a club, and therefore we approximate this number that way. Now it's a little bit small community, nevertheless, it counts 45,000 people or so. One of the things we'd like to see more and more happening is actually more individuals that have a background to become an angel and have the wealth, but also the industry expertise, the connections and the network that they can bring, really embrace angel investment and do that responsibly by joining clubs that can guide them in education and guide them in making their first deals. And of course, also through programs like the one being run today, which are doing an incredible job in increasing not just the population, but also the professionalism of within the angel investment community. A couple of more charts and then I'll take a pause. So this is, we're tracking within our research also how much, what is the typical funding round that an angel investor is doing with, of course, a lot of different countries here dropped into this average. So it may differ quite a bit depending on the country you are. But let's say across Europe, the typical angel round is at about 200,000 euros in size. Notable differences, of course, in markets that are much, much more developed in ecosystems and startup hubs that are, boasting a lot of unicorns and a lot of companies that are quickly scaling, typically are attracting also funding rounds that are much, much larger than those present in markets that are not of the same size or anyways not of the same development. So take this a bit with a pinch of salt. It's more to just indicate, overall around Europe what the trend is. And the trend is angel deals are starting to get more and more expensive. There's more competition, of course, also for those deals with many VCs coming in relatively early and always earlier in the stages of funding that they're approaching. And this also drives up a bit the supply of capital and the chances of founders also to get a better deal and a better pool of investors than ever before. Here's a bit of the breakdown of the deals we're observing in our community. So this is based on roughly 3,000 or so transactions observed in the year 2023. Most angel deals are falling in that 100K to 500K scope. So I think many of us at least have made our angel investments, at least the first round of ticket, in that kind of pool, in that kind of funding size. You can see also, though, that there's more and more angels able and capable of doing funding rounds well above that. So the 500 to $1 million and $1 million and above actually are making up more than 30% of all the transactions that are happening. And that is attributable to a variety of reasons, but namely that angels are starting to become, more and more important in terms of their investment capacity, especially when they start to form syndicates that are, large and important in size. And we're seeing actually a lot of angel rounds happen also together with VCs. So be they late series seeds rounds, or be they, Series A rounds, we're starting to see also angels capable of following on and co-investing with the VCs as their startups continue to grow. And that is really thanks to the important role that the syndication and the syndicates of angels is doing. So this kind of chart is a bit of a big summary of a lot of the different stats and the pieces of information I've been walking you through. Maybe one of the things I didn't comment on was what are the sectors most interesting for angels, and this has a bit shuffled over the years, but enterprise software is no longer the most common area for angels to invest in. That is now health, broadly intended, with a lot of digital health solutions also coming up. I would expect to see in our latest numbers, which will be coming out next week, also a big increase, not so much in enterprise software, but in the funding going also to space and defense companies, artificial intelligence companies, which are not, at least in 2023, were not yet kind of the peak or among the leading sectors people were investing in. And I think this is more or less all that I wanted to say. I conclude with a quick invite to join us if you'd like next week in Brussels for the European Angel Investment Summit, the annual event we host every year together with the Commission. It's a 2-day event attended by several hundred investors, entrepreneurs, as well as policymakers around Europe. This year, we're going to be discussing 3 really key important topics. One, the creation of a 28th regime sandbox initiative, where startups can hopefully have an easier time scaling and growing their business around Europe with a simplified regulatory framework, which would be the so-called 28th regime. So we're pursuing that actively also with our friends at the EU Inc. Movement. Second big topic is increasing the role of pension funds and increasing the investment by those institutional investors in the VC asset class, something that we desperately need in Europe to start funding also the scale-up rounds of the companies as they continue to grow and stay, hopefully, here in Europe. And then last but not least, we're going to present our latest proposal for the new and improved co-investment schemes targeting business angels, which the EU Commission can set up and then deploy across the EU with national development banks. So we'll be advancing a proposal to the EU Commission next week at our event. And there's a lot of other great reasons to come. I would say meeting up a lot of amazing people from different parts of the world is a huge reason to come to our event. There's also a lot of great startups presenting. We've selected 15 out of more than 300 applicants to come and pitch on stage. And there's a lot of great vibes and good times happening at the summit. So with that, I conclude, and thank you guys for the attention. And if there's anything I can clarify, happy to take questions.
Great stuff, Jacopo. Thank you so much for jumping on and doing that for us. And really looking forward to seeing you in Brussels next week. On Tuesday, Wednesday next week. So myself and Dan will be over. So can't wait.
Amazing. Looking forward to seeing you guys. And
Good
thanks
to
so
see
much.
you, Jacopo. Thanks very much.
Likewise. Thank you, Nuala. Thanks, Larry. Take care.
Jacopo. Okay, take care.
All the best.
Okay, folks. Look, I think that was super interesting, and we've run over a little bit. So thank you so much for staying with us. Look, a quick recap. I think we've covered a lot of ground today. We looked at the Ukrainian angel ecosystem at the start with Yuri. We had a really interesting session with angel syndicates with Aidan O'Driscoll from Eris. Donna spoke to us about moving from informal syndicates to formal syndicates and how you structure that. We had some interesting discussion with our panel members, Anna and Seamus and Andrew. And we got to see our pitch from Ole, and he got put through his paces with very typical kind of hard-hitting questions from that you would get from an angel investor, and just hearing from Jacopo and all of the good work done in IBAN and getting a flavor for the growth and the kind of history and the kind of current state of investment across angel investment across Europe. So hopefully you found that really interesting. Our next steps. So this is workshop 2 of 3 workshops. So our next and final workshop is in a little over a month's time. So November 27th at the same time slot. So anyone that had registered for this will automatically be registered for the next workshop. So we're going to move on a little bit there. Our thought process now is to move on from today was covered screening deals and pitching and the kind of questions that you would ask at a typical pitch session. So we're going to move on to what happens after a pitch session. So looking at due diligence, looking at how we decide whether we're going to invest or not in a company. When we do invest in companies, how we manage that portfolio, how we manage that investment, how they communicate back to the syndicate, etc. Start to talk about how we manage and facilitate exits and get some success and some return on investment back from these investments. So I think this is the real critical workshop to see, and we're looking forward to doing that in a month's time.